What's going on, guys? Welcome back to another video. In this video, I've got another very important AMC update to bring all of you this evening. So what we're going to be covering in this update is a little bit of the Ortex data, but then we're going to be getting into some of the most important things that I really want to discuss with you guys in this update. And it's honestly a pretty big problem that I'm kind of seeing with what's going on with AMC right now. A lot of people are looking for that squeeze catalyst. We have been at this for a while, and all of us are kind of ready for this stock to start to run. Now, there's something that I've been seeing that needs to change and has not changed, and I'm going to explain that to you guys in this update. Now, in addition to this, we also have to go back to some of the reported data that we're seeing, and it's kind of either signaling that we are in for a big short attack, or we are prepared for a pretty substantial move to the upside. Now, I know that sounds pretty vague, but you're going to understand exactly why once we get into that part of the video. So before we get into all of that information, if you enjoyed the information and analysis that I provide for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. And again, guys, it's really choppy markets out there, but if you do want a very successful strategy to kind of get you through this and honestly make a little bit more money, if you want to put it into AMC, you can do that. Check out that Discord link down below. You're going to get me, TMI, Review Dork. We're all in there. We do those private live streams. You get alerted on those 1348 crosses on 350 stocks on a wide variety of different time frames and cryptos, so make sure you guys check that out down below. So AMC today closed the day at $15.32, down about 39 cents, 2.48%. Again, not a day that we really wanted to see here. Now let's get into some of this catalyst situation and the problem that I'm kind of seeing with the way that we're kind of setting up right now. So let me take you guys back to January. Everybody was kind of really hyped up about the January options chain. We saw a lot of open interest going in there. We were all excited that we could see a pretty substantial move to the upside. And then what happened? Nothing. Why? Because the options chain was not set up the way it needed to be. And guess what? Even after all of the videos, all the tweets, everybody trying to educate people about this, nothing has really changed. When we come over to the options chain right here and take a look at this March date right here, we don't really see any open interest at these at the money or in the money strikes. Now, let me just give you guys a quick explanation as to why this is important. The people who are selling us these options and institutions these options are the market maker. Now, what happens is after they sell these options, they have to hedge them. It's called delta hedging. So what they have to do is then go out in the open market and buy the appropriate amount of shares to maintain that directionally neutral status. An example of this is, let's just say a market maker sold one of these $15 strikes right here for next week. The delta is 0.58, so they would then have to go out and buy approximately 58 shares, since every options contract is controlling 100 shares, in order to maintain that directionally neutral status. But the main thing here is that the market maker would have to buy. So anytime an option is bought, it's essentially levering up the amount of money that the market maker is going to have to use to buy the shares. So let's say you bought this option right here for $100. Well, the market maker would have to buy 58 shares. That's going to cost a lot more than this $100 right here. So that's kind of what we're looking at here. And you're going to need every single squeeze that's happened in the past, or every single giant price movement that we have seen. It always comes with a giant options chain. Now, what's happening now is I want you guys to think about this like stair steps. We are trying to kind of climb up those stairs to get to the next level of whatever flight we want to go to. The first floor, second floor, third floor, fourth floor, whatever. But what we're looking at here is we can see the last stair step, which is this right here, this $95 strike of 85,000 open interest, but we have no stair steps really leading up to that. So it's going to be very, very difficult in order to get up to that final step to get us up to those higher price points if we don't even have stair steps taking us there. So this isn't really saying, hey, go out and buy in the money and at the money options, because again, with what we've seen in the past, people are going to do whatever they want with their money. I just want you guys to understand the effects of what's going on here. And we can see this again. A lot of people were pointing to that July options chain. Nothing really crazy is going on here. Yeah, there's 2,000 open interest at this 14, but nothing too crazy is going on throughout the chain. And coming back to March over here, this expiration date. So I'm not really all that crazy and hyped up about a potential gamma squeeze going into next week, just because there's nothing really here. We would have to get all the way up to $20, which we've done in the past, but we've had a little bit of trouble holding those price levels. We would have to get to 20, and then after that, well, there's nothing all that crazy until we get to 25. And then 30, there's a decent amount. So all of these big options, basically price points where we would see a lot of delta hedging, are pretty far away from where we're currently trading. For example, if everybody or if a lot of people or if a whale came out and just decided to buy a bunch of these $14 strikes here, they would force the market maker to buy a boatload of shares, pushing the price up, sparking FOMO, more options buying, and you would see that gamma ramp start to kind of set up. So that is kind of what I want to get across to you guys, that one, we are in the same place kind of right now with AMC. We're seeing the company get better fundamentally. It is a great, great, great thing to see. And again, I know a lot of people are going to say this isn't really a fundamental play, but then those same people are going to start asking about dividends. Well, we need the company to get better fundamentally, which it is doing right now. And we eventually are going to see that reflected in the share price. What this situation is to me right now is the market is not accurately reflecting to the total available information about this stock. We're seeing a lot of basically manipulation on a day-to-day basis. A lot of these short exempts, failure to delivers, we've seen a lot of those in the past, and eventually a lot of those are going to come due, and we're going to see the market start to reflect all of the available data. Now, let's get into this kind of situation that I've been seeing with a potential for a massive short attack coming, or a potential big move to the upside. So when we come over to this Ortex data right here, for some reason, Ortex is having a little bit of a glitch right now. So it's saying nothing on the returned and borrowed shares, nothing on the cost to borrow minimum, average, or max, but these numbers did step up a little bit today. Now, the reason for this is that the shares on loan now is up to 129.28 million, but the shares that have actually been shorted are only at 106 million. Now, that presents about 23 million shares that these institutions can use to basically come out and short the absolute nuts out of the stock like we've seen it happen in the past. But why aren't they doing it right now? Why not? We're seeing kind of the price bounce around, but if you have 23 million shares that you can dump on the stock, why not do it and spark a lot of fear? Here's kind of why we might not really be in that kind of phase where they're going to dump all of these shares on us. And I want to take you guys over to this chart right here. This is going to be shares on loan in this kind of pink red color right here, and then exchange reported short interest in terms of the amount of shares that are actually shorted in these time frames. Now, when we come back here, we're seeing, yes, the exchange reported short interest go up, but the shares on loan is going up at a much faster rate. And you can see this gap right here, 150 million shares on loan and only 87 million shares right here that were exchange reported short interest in terms of how many shares the exchange was reporting. But when did this happen? April 26th. What happened the following weeks after April 26th? Well, we get into May, then we get into June, and we start to see that massive price movement to the upside. Then we can kind of start to see this divergence right here around September 27th. Now, it's a little bit less of a divergence, but when we come over to AMC's chart over here and we kind of take a look at it on the daily time frame and go all the way back to September right here in the beginning of October, well, we're seeing it right around here at this $37, $34 level when it comes down here. Then we rip all the way up to 44. So it kind of begs the question, why are there so many shares out on loan and they're not really using them right now? Now, yes, it's very possible that they are kind of just slowly filtering these shares in, but there's a lot of theories going on as to kind of how to limit the shorts and jack up the utilization and cost to borrow. What if an institution is just kind of taking these shares out on loan and not really using them to just kind of pump up these utilization and cost to borrow numbers? If they're long on the stock and they're taking out loans of it, yeah, they're going to pay a little bit of a cost to borrow, but the potential gain that they're going to have on the upside of that stock going up are going to be much more than what they're going to pay on those shares going out on loan. Now, right here, we're starting to see this divergence again. We're seeing shares on loan go up, and we're seeing estimated short interest or exchange reported short interest kind of stay flat or even start to trend to the downside. When this starts to happen, we've typically seen big price movements to the upside. Now, I'm not saying that we are going to see that big price movement to the upside right now, but what I would want you guys to kind of pay attention to is some of these movements right here. Again, the 100% utilization doesn't make a whole lot of sense with the cost of borrow being as low as it is. But things are kind of starting to move here. There's not really a direct conclusion that could be drawn from this. It could go a variety of ways. but it's definitely something to keep a lookout for. So that is going to wrap up this update on AMC. If you enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. So I hope you guys are having a great evening, and I'll see you guys in the next one.